Hi, everyone, and thank you for attending our webinar today, the Financial Crime Report, the RiskOps Age. My name is Indigo Willman. I lead content marketing at Feedzai, and I'll be your host. This webinar recording will be available on demand on the Feedzai website next week. Today, you'll hear from Rob Rendell and Leonor Frazão, Senior Data Scientist, and Rob Rendell is the Vice President of Payment Solutions and Principal Product Manager at Feedzai. Rob and Leonor, thanks for being with us today. Leonor, before we get started, can you just kind of explain the methodology of our reports? How do we arrive at the findings?
So we have a wide coverage of our client base at Feedzai across the globe, and this really enables us to have an overall picture of the market. So for this specific report, we drilled down the trends over the last 3 years, so since 2019, and we looked at the order of billions of transactions globally with varying payment methods.
Yeah. And we did that the 3 years because we really wanted to see sort of pre-pandemic, pandemic, and then what we hope is post-pandemic. So great, let's dive into some of the noteworthy findings of the report. I think one of the most compelling findings was that online transactions rose 65% from 2019 to 2021. And that makes sense considering the impact of the pandemic, right? We all shifted to online. But fraud increased a whopping 233%. Rob, did this surprise you? Like, what did you make of it?
Not at all. Fraudsters like money and it's their full-time job. And stealing the words of a salesperson, the pandemic was really a compelling event where fraudsters were able to capitalize big time. We saw, and the industry saw, card not present fraud increase at a rapid rate, major issues with account opening and account takeover, all fueled by issues at the state and federal level with loans and unemployment benefits. And then you combine that with past compromises with PII data, it really created a perfect storm where fraudsters were able to take advantage of the issues.
Yeah, it's true. Leonor, when banks see like a big change, like an increase in particular behavior or transactions, like they did with the rise of online transactions, what are some things that they should do to their systems to like adjust the systems for that change?
So I say that using machine learning models is really the most flexible and robust way you have to adapt to changes. So if you've trained machine learning models, they might pick up this kind of patterns, but also you should make sure to keep them up to date. So if you already have a machine learning model, then make sure to retrain it with recent data so that you have the most recent fraud patterns and you can prevent this kind of new fraud.
That's good advice. I think the sheer volume of digital transactions really changes the payments and banking landscape just because of all the data that it creates, right? The average American has access to more than 10 connected devices in their household. And that's only going to grow, right? Like, I mean, imagine a world in the not too distant future where like you can make a payment with your car. It sounds really sci-fi, but it's on the horizon, it's happening. And Rob, I think that puts a lot of pressure on financial institutions to manage identity across a plethora of devices and often in real time, right? Real-time payments equals real-time risk. So what are some tips for banks to manage that today and also to be prepared for sort of this unknown tomorrow?
Well, I think financial institutions really need to look at what controls and evaluate how effectively and efficiently they're being utilized today to combat the fraud of today. And if they did see major fraud issues during the pandemic or even now, they need to do defect reviews or gap analysis on where those failures exist. And where failures do exist, fraud leaders need to understand, how they can leverage technology and data in real time. As you said, right, look at and to people want to transact from anywhere, from any device at any time. And it's all happening in a blink of an eye. So the data needs to be there in real time to combat that risk. To your question on, the future, financial institutions need to partner with firms like Feedzai or others who are investing in R&D to combat that fraud that is, forward thinking 24, 36 months down the road.
Yeah, yeah. Leonor, from a data science perspective, like what are the challenges that this sort of abundance of data creates? And are there any tips that you can offer about, how to manage so much data?
Yeah, so there's a lot of challenges in having a lot of data. So first, you don't know how good your data is, and you have to do a lot of data cleaning sometimes and understanding what you actually have. And also in terms of technology, right? You need to store it, you need to make sure you compute it quickly. And so right now, what I think is that using cloud solutions is really the way to go. They're really secure and compliant, and they make it easy on institutions to handle this amount of data without having to have any in-house systems and support. And then it also allows you to have distributed computing and to be flexible in terms of your needs. So when you have more data, you have more resources, and if at some point you have a lower volume, you don't need as many resources. It's really very flexible, and it's where the future is going.
Yeah, I think flexibility is a great word, because I think that is like one of the things that has really shifted because of the pandemic, is just the flexibility of everything now. How we work and how we live is just radically changed. And I think it's really this whole data thing that is why we call the report the RiskOps age. We thought about RiskOps following sort of the DevOps tradition, and that was born out of a kind of a dysfunction of like the traditional way that software was developed. And so as things change, there needed to be a change. And I think looking at data today for Feedzai, it was just so clear that we're at this tipping point in risk, right? To continue managing risk the way we did before, like this plethora of data, right? To continue managing it in silos, it's acting as if the world hadn't radically transformed, and that's just not the case, right? Rob, how do you see RiskOps developing in the next few years?
So not to sound cliche, right? Financial crime and risk is evolving, meaning there's a convergence happening between people, process, and technology within financial organizations, and questions are being asked, right? Is it a credit risk issue? Is it fraud risk? Is it an AML issue? I think new account opening is a perfect example of this. So the concept of RiskOps will help break down those silos and look at risk, process, and how we leverage technology and data more holistically to get that 360 view of the persona, the devices, how they're interacting and engaging with a financial institution is going to be key. And then, you got to look at it from the standpoint, an organization would want a common platform to set a strategic vision to manage the customer risk, optimize the process, and then reduce the technology overhead due to the centralization of all those things I mentioned.
Yeah, yeah. It's really encompassing, but it really is about how things have changed, where we are today. And what do you see the benefits of that, of sharing data across an organization?
Sure. If you look at it, an organization would have, the ability to look at that customer very horizontally versus, what we've seen historically in silos. So a customer might have a mortgage, they might have a credit card, and they might have a retail banking relationship. Historically, being able to connect those dots across those silos was very it was a challenge, right? And if an organization is able to break down those silos and connect those dots and have that holistic viewpoint, it opens up opportunities not only it does two things, right? It opens up opportunity to mitigate risk, but it also opens up the opportunity for an organization to cross-sell, extend existing or new products and features to a client, and basically get more return on investment with customers, and offer them the capability to have more products and features and deepen relationships.
That makes sense. It kind of allows them a sort of hyper personalization that they can do with their customers. That makes sense. Leonor, if I'm a bank and I recognize that yes, things have shifted and RiskOps sounds great, but I haven't shifted. Like, what's required to kind of make the shift to a RiskOps methodology?
Sure. So first, as Rob said, we need to centralize the data from all different sources. So you need to make sure that you can identify all the entities and that you can match them. So for example, that a customer made a certain payment and then also a certain transfer and took out this mortgage. And if you have to identify this customer as an entity, and be able to join this information in a single point. With this, being able to identify the entities, then you can also use machine learning to profile customers or accounts and to really look at each entity separately and that their behavior and any change in behavior, be it in any payment channel and in any product that you have in the institution. And then also being able to have a single place for all users, such as fraud analysts, anti-money laundering analysts, data scientists, to collaborate in preventing fraud and in improving the fraud prevention.
Okay, we spent some time on this, which makes sense. It's a huge finding and really the biggest radical shift. But let's take a look at some other notable findings. One of those things is this question that people have bounced around a lot: is cash on the way out? And we saw a 75% decrease in cash withdrawals in the US, and it was sustained, right? 2019 through to 2021. Rob, do you think cash is on the way out? Like, what are the pros and cons of that when it comes to fighting fraud and financial crime?
There has been a significant decrease in cash as a result of, payment digitalization in recent years. You look at cardless methods, tap and go, P2P, and a plethora of wallets out there. Will there always be a need for cash? Yes. And will there always be issues with fraud and AML with cash? Yes. So what do? Right? We need to look at the risk with ATMs and branches and placement, of those devices and machines differently. We also need to look at payment conversion to cash differently. We need to look at both how people use cash and how cash is obtained. So if you look at, ATMs in certain areas, why do, certain ATMs have huge variations in usage? Does one ATM have higher risk than another? And you look at real life examples, you look at ATM risk and placement, as I said, like an ATM in a casino or an ATM in a cannabis dispensary. What's the perceived risk related to those machines? And also looking at branch placement and how individuals obtain cash is all key. So what you need to do is you need to look at it, with new eyes, and then tailor models and rules around these scenarios, both from a fraud perspective as well as an AML perspective.
Wow, you've dropped a lot of knowledge there in a short amount of time. That was a really robust answer. Thank you. And I think the big takeaway is, cash is here, but it's not king anymore, and banks are adjusting. I think another finding is that everybody binge watched during the pandemic. Apparently, so did fraudsters. We saw a 794% increase in fraud for digital entertainment. Leonor, can you tell us a little bit more about this? Was that a global phenomenon, or was it limited to a specific region?
So this specific number actually comes from payments in the US, but it's not only US. So we also saw this trend in other regions. And one example is that we also saw this kind of increase in Australia.
Okay, so we're seeing a global effect here. Rob, is there anything about digital entertainment that just makes it more vulnerable to fraud or more appealing to fraudsters?
Well, just a general observation, right? It's, fraudsters like to relax, and when they do, they enjoy digital entertainment. So they're taking advantage of, card compromise and card not present fraud, and using those cards that they find in the dark net and loading them to a Netflix or a Hulu, and, relaxing when they're not lining their pockets full of cash.
Yeah, I think also probably just the that there are these small transactions. So, small amounts, $14, $15, might be easier to hide. So yeah, fraudsters like their Netflix too, man. So, Leonor, any tips for banks around their rules or models on how to prevent against this?
I would recommend building granular profiles at the entity level. So let's say looking at devices and looking at suspicious behaviors, for example, high velocity of transactions. So a lot of transactions in a short period of time in certain devices or also in certain IP addresses. And these kind of features, they can be used then in machine learning models and also even in simple rules that you can quickly roll out to stop any attacks.
That's good advice. Another fraud fact that we uncovered is that banking apps are the safest way to bank. We saw 50% lower fraud rates when customers used their device, their bank app, versus computers, telephone banking, and in-person banking combined. Rob, what do you make of that?
So in short, mobile devices and mobile banking is very secure. I never thought in my career I'd know more about a mobile device than I do. And there are so many safeguards for me to say that statement. Unfortunately, computer devices are still very susceptible to compromises where fraudsters prey on victims with malware, device emulation, phishing, and account takeovers. And unfortunately, the computer is still very susceptible to fraud with those transactions versus mobile.
Yeah. Leonor, does anything change from your point of view if a transaction comes via an app or, in other ways?
So when you start using a mobile app for banking, usually you need to authenticate your new device. And this is already a first layer of assessment, right? So this is where we can start assessing the risk. Then once your device is authenticated, when you make a transaction, then you already know that this device has been accepted, and that already lowers the risk of these kind of transactions. And then you can always have the device history if you are able to identify the device in each transaction. And you can also build a profile of the customer, so of the behavior of the customer in this particular device. And this lets you know if the customer is doing their normal behavior or not.
Yeah. So let's talk a little bit about the coordinated attacks we saw against businesses. I mean, I think this level of coordination speaks to fraud efficiencies, right? Fraudsters are running efficient programs. I'd love to get from both of you just your thoughts on what we saw in these sort of focused attacks. 30% of attempted transactions were fraudulent over 2 months in a card not present attack. 5 million cards were tested over 4 months in a bin attack. And 4,000 social engineering attacks happened in 10 days with an online banking fraud attack. Rob, do you have just kind of your take on all this?
Yeah, I think well, to cards testing, right? Again, goes back to the cards being captured in the underground and being used for card not present, and then the testing happens, and then they go out and do big dollar transactions. So that's part of the problem, right? So they need to, banks need to have, controls around micro testing, right? So very like pennies on the dollar for a test, and then all of a sudden a large dollar purchase. Social engineering, it's interesting that, this continues to be a major problem, and especially with account takeover. So fraudsters, typically call call centers, social engineer, gain more and more information, and they finally, take over someone's account. They gain access to, a digital channel, and they move the money out. And it's a combination of a problem with account takeover, but also, the funds need to go to another financial institution. So there's still challenges, going back to my earlier comments related to account opening and mule activity. So it's all working in concert with each other, there's always a victim, and there's also always a criminal aspect with fraud. So things go hand in hand.
Yep. Lastly, we uncovered sort of the top 5 fraud types of 2021. So at number 5 was smishing, which is text or SMS version of a phishing email. I want to say I got so many of these. It's just increased exponentially. Impersonation scams, fraudsters pretending to be legitimate actors, and they trick victims into compromising their accounts. Number 3 was purchase scams. Victims purchase goods online that never arrive. Number 2, social engineering scams. Victims are tricked into handing over personally identifiable information, PII. And the number 1 sort of scam or fraud type was account takeover, a form of identity theft. Fraudsters change account information, including passwords, and take over the account. Were there any surprises for either of you on the top 5?
I think just 3 of these of the 5 here on this page are all related to scams, right? And scams is, continues to be more and more of a problem. The UK reported that scams outpaced or had more losses than account takeover last year. So that is surprising. So that means that the fraudsters are, victimizing consumers to do the transactions on their behalf. So that's very unfortunate. Financial institutions, and just in general, we need to do a better job at education campaigns to make sure that, people are learning about smishing, a smish, right? A text to a device, and they gain access or control of a banking account, or, they receive a phone call pretending to be a bank, and they, grant access to their device or the mobile phone, and then the fraudster, does the transaction. So net, there needs to be layers of control related to both authentication of online channels, also, controls related to call centers, and then ultimately controls around the transactions themselves, to pick up on these scenarios, whether it be a scam where the true customer is doing the transaction on the behalf of the fraudster, or the fraudster doing the transaction because they gain access to a customer's account. And layers of control is key to make sure you're able to pick up on those red flags prior to the transaction leaving a financial institution store.
Leonor, any thoughts from you? Anything surprise you here?
So not really. I mean, as you said, I've also seen smishing myself, and I feel like there's a lot more of it with the pandemic, and for example with the ordering things online, and having being sent links on SMS to click, and also some of these were actually attacks like we saw in the previous findings, so directed attacks in a short period of time. And this is also how fraudsters make it easier, right, to hit and go, and to be able to get the most of it while they can.
Yeah. So ATO, we keep seeing over and over ATO. What's the solution?
So I think you have to look at it, and back to Leonor's point earlier about the RiskOps platform, right? being able to plug in data from multiple sources and being able to point that data to a risk engine in real time is key. You really want to move that needle further up in the life cycle of fraud, and leveraging, digital trust data plus other layered controls to have multiple points in the life cycle to prevent and detect the fraud is key.
So that's it. Thank you so much for joining us today for the Financial Crime Report, the RiskOps edition. And thank you to both Rob and Leonor for joining us today and giving us all this great information. Everyone have a lovely afternoon.